Investing in stocks is more than just owning a piece of a company, it's a ticket to financial freedom. In the current economic landscape, the power of stock investing cannot be overstated. It's a journey that might seem daunting at first, but it's one that's filled with the potential for high returns. Imagine for a moment that every dollar you invest is an employee. They're out there working tirelessly around the clock, making more money for you. That's the beauty of stock investing. It's your money working for you instead of you working for your money. Stocks play a crucial role in diversifying your investment portfolio too. By spreading your investments across various industries, you're not just managing risk, but also positioning yourself to capitalize on growth from different sectors. In a world of low interest rates and economic uncertainty, stock investing offers an attractive avenue for wealth creation. So buckle up and let's dive into the exciting world of stock investing. In the realm of electric vehicles, one name that's been charging ahead is NIO. NIO is a Chinese automobile manufacturer that has been making waves in the electric vehicle industry since its inception in November 2014. What started as an ambitious venture by founder William Li has rapidly grown into a major player in the global electric vehicle market, standing shoulder to shoulder with giants such as Tesla and General Motors. NIO's journey is one of rapid growth and steadfast innovation. In a span of less than 10 years, the company has released multiple electric vehicles, each one more innovative than the last. One of their key milestones was the launch of the ES8, their first mass-produced model in December 2017. This 7-seater high-performance electric SUV was a game-changer, putting NIO firmly on the map. Following the success of the ES8, NIO didn't rest on its laurels. Instead, they continued to innovate, launching the ES6, a 5-seater electric SUV, and the EC6, a 5-seater premium electric coupe SUV. Each new release demonstrated NIO's commitment to technological advancement and sustainability. But NIO isn't just about producing electric vehicles. They are also leading the charge in battery technology with their innovative battery-as-a-service model. This unique offering allows customers to buy an electric vehicle without the battery, significantly reducing the upfront cost. Customers can then subscribe to a battery plan and swap their depleted batteries at one of NIO's many battery swap stations. This revolutionary approach has set NIO apart from its competitors. NIO's rise in the electric vehicle market is a testament to innovation and strategic vision. They have shown that with a clear focus on customer needs, technological advancement, and sustainability, it's possible to make a significant impact in a market that was once dominated by traditional fuel vehicles. As we continue to move towards a greener future, there's no doubt that NIO is a name that will continue to electrify the automotive world. Opening, the stock market is a roller coaster ride, and NIO has had its fair share of ups and downs. Let's take a step back and delve into the thrilling journey of NIO's stock performance. This will give us some context to understand its current standing and future prospects. Starting off as a relatively unknown player in the electric vehicle industry, NIO's stock began to gain traction around the mid-20s. Investors started to recognize the company's potential as it consistently showcased innovative technology and robust business strategies. However, like any other stock, NIO's journey hasn't been a straight upward climb. There have been highs and there have been lows. The company faced major setbacks in 2019, when it had to grapple with a decline in sales and financial difficulties. This caused a significant drop in its stock price, making it a tough year for NIO and its investors. But NIO bounced back. In 2020, the company's stock skyrocketed, thanks to a surge in electric vehicle demand and the company's strategic maneuvers to stay afloat during the global pandemic. This period marked a significant turnaround for NIO, turning it from a struggling startup into a formidable player in the electric vehicle industry. Moving forward, NIO's stock continued to see some volatility. Market events, such as fluctuations in the global economy, changes in government policies, and competition in the EV market, have all left their mark on NIO's stock price. Yet despite these bumps in the road, NIO's overall trajectory has been upward. The company has shown resilience in the face of challenges and has consistently managed to steer its course towards growth. Closing. Understanding NIO's stock market journey helps us anticipate its future trajectory. This journey, filled with ups and downs, victories and setbacks, paints a picture of a company that's not afraid to take risks, constantly innovates, and is committed to its vision. And that's the kind of company that makes for an interesting investment. Every investment comes with its own set of opportunities and challenges. NIO is no exception. As we dive into the electric vehicle market, one of the key opportunities for NIO lies in the market's sheer growth potential. It's a sector that's been seeing exponential growth, driven by a global push towards clean energy. With its innovative electric vehicles and battery swap technology, NIO is well positioned to ride this wave of change. Plus, with China being one of the world's largest EV markets, NIO's local knowledge and strong governmental support can give it a competitive edge. But it's not all plain sailing. The electric vehicle market is fiercely competitive. Giants like Tesla and emerging players like Rivian are vying for the same piece of the pie. NIO would need to stay ahead of the curve in technological advancements and cost efficiencies to hold its ground. It's a high-stakes game of innovation and adaptation. Then there's the regulatory environment. NIO, like other EV manufacturers, faces the challenge of navigating a landscape of evolving regulations and policies. Changes in government support, environmental standards, and international trade policies can all impact NIO's operations. The recent global chip shortage is a perfect example of how external factors can throw a spanner in the works. And let's not overlook the financial aspect. NIO has had a history of financial struggles, and while its recent performance has been encouraging, maintaining financial stability in a capital-intensive industry is a constant challenge. It's something that investors need to keep an eye on. In conclusion, NIO presents a mixed bag of opportunities and challenges. On one hand, the booming EV market, its innovative solutions and strong governmental support open up exciting avenues. On the other, intense competition, regulatory uncertainties, and financial stability concerns pose significant hurdles. A clear understanding of these opportunities and challenges can guide investment decisions in NIO. Now, the million-dollar question: what lies ahead for NIO and its investors? As we peer into the crystal ball of market trends and company fundamentals, we find intriguing possibilities. The electric vehicle market is on a steep upward curve globally, and NIO, as a frontrunner in this race, stands to benefit immensely. The company's consistent focus on innovation and customer satisfaction, along with its robust financials, makes it a strong contender in the market. However, the stock market is a roller coaster, and NIO is not immune to its ups and downs. The company faces stiff competition from other EV giants and must continuously innovate to stay ahead. Moreover, the global chip shortage and supply chain disruptions could pose significant challenges in the short term. Therefore, while the long-term prospects of NIO seem promising, investors should brace themselves for potential volatility. On the upside, NIO's expansion plans into international markets, particularly Europe, could unlock new growth avenues. The company's unique battery-as-a-service model also offers a competitive edge, potentially leading to recurring revenue streams. As for NIO's stock performance, given the current market dynamics and company fundamentals, a bullish trend seems plausible. However, the stock is likely to experience bouts of volatility, which is not uncommon in the EV sector. Hence, potential investors should factor this into their risk assessment. In conclusion, while NIO has a promising future in the booming EV market, it is not without its share of challenges. A prudent investor should keep a close eye on the company's performance, market trends, and potential risks before making an investment decision. While the future is never certain, careful analysis can provide valuable insights into NIO's stock potential. Investing is as much an art as it is a science. As we've navigated through this discussion, we've seen the rise of NIO as a formidable player in the electric vehicle industry. We've taken a deep dive into their stock market journey, scrutinizing the various factors that have influenced their share price. We've discussed the opportunities that NIO presents to investors, and the challenges it faces in an ever-evolving business landscape. We've also peered into the crystal ball, exploring potential scenarios for NIO's future stock performance. But remember, these forecasts are based on current trends and situations, and the stock market is a dynamic, ever-changing entity. As we wrap up, let's reiterate the importance of conducting your own thorough research before making any investment decisions. Don't just rely on forecasts, but evaluate the company's fundamentals, market position, and growth prospects. Remember, every investment decision should be based on careful analysis and sound judgment. Happy investing!